Hello, everyone, and welcome back to another episode of Stock Savvy, a series where we investigate an individual stock on the JSE. And every week we are joined by an expert guest. And this week we are joined by Higgo van Biljon, the so-called Oracle of Somerset West, and he'll be chatting to us about Santova. Higgo, welcome to the show.
Thanks, Paul. I don't know where the Oracle of Somerset West comes from. But anyway, I think there's a few of them in Somerset West. But yeah, thanks for having me. I'm looking forward to share some insights on Santova.
Great. So, Higgo, before we get to Santova, tell us a little bit about yourself and your journey into investments.
So I've always been that kid that just, sold cookies at school or biltong and droewors or anything to make some extra money. And then also just the entire theme of whatever money you have, to make it more. So to make your money work for you, almost as if it's employees. While you sleep, your money can work for you. That concept was just, it always stood by me. And when I was grade 6 or grade 7, I told my dad, I saved some money from birthday gifts and all of that and some of the stuff I sold at school. I want to buy a gold coin. How can I do that? And he's like, why you want to buy a gold coin? I'm like, I want to put my money now where it's going to be worth more in 10, 20, 30 years' time. And that's when he said, no, rather look at the stock market. And he showed me a very, very basic overview of what the stock market entails and that concept of the companies where you shop at, the companies that you know, that you hear of, that you see in the ads, that you can actually own a piece of that company. And that was just like, okay, I need this. And back in the day, just bought 2 shares just to show me what it is. And he bought Lonman and Astral. And that was right after the Marikana events when Lonman actually fell a lot. And we bought right at the bottom. And we made like double our money in the span of a few months. And I'm like, okay, this is just crazy. And since then, I was a kid in school, hiding my phone from the teachers and just learning about stocks, learning about investing. And by the time I was grade 9 or 10, I actually took my parents' suspension fund. Quite a big portion of that, and I started investing for them after showing them my research and my methodologies and all of that. And fortunately, that performed quite well. One of the biggest investments then was Nvidia, and also later Santova. So that's also why we were speaking about Santova.
Great. I know you have a very interesting story about Santova. You told me the other day how you actually heard of the company for the first time. Please share it with our community.
Yeah, so Santova, I was actually in first year in varsity. We had a group project, and we had to pick a stock listed company on the JSE to research them, and I can't remember what it was, the project. But my group member and we actually chose Santova, as I've heard about the company back then, but I didn't really know it too much. And when we got into Santova, I was just looking at the results and the presentation. Even back then, it was like 1 Rand 10 a share. So it was like almost a 10x from where it is now. And I remember both my partner and I were just like, this company is crazy. I mean, we didn't know that much, but from what we saw, every year they were just delivering earnings, revenue growth, expansion, presentation in a cool industry. And that was when I actually started really not fall in love, but found a lot of interest with Santova.
So Santova, I know you love the company. It is his biggest holding, everyone listening, and it's paid off. It wasn't always your biggest holding, but of course, with all the growth, it is now your biggest holding. Tell us about the company, Santova 101. Go for it.
Yeah, so Santova, it's not always the easiest company to understand. They have a lot of moving parts, but it's basically end-to-end supply chain management. So what that entails is it includes, they call themselves an international tech-based trade solutions specialist. So that is some big words, but it's basically logistics, supply chain management, project management, financial services, client sourcing. It's so many things, everything that has to do with trade, logistics, getting a product from one country to another country, or even from one province to another province. So anything that has to do with trade, they have something that caters for their clients. So that's why us as consumers don't really know Santova. It's not a B2C business to consumer. They are business to business. So they help other businesses that actually sell goods to get those goods from one point to another point in a very, very simplistic nutshell. And they pride themselves in their technology solutions, so that they are tech-driven, innovation-driven, and that's also why they really put a lot of emphasis on how good their operating margins and their efficiency are within the organization.
So tell us specifically, Higgo, how does this company make money?
Yeah, so that is a very good question. It's also one that a lot of investors I don't think understand, and that's one of the reasons I think why Santova is undervalued is just because it's difficult to understand. It's not a simplistic business. We sell bread and that's how we make money. So in Santova, because they're operating in various areas and regions and countries, they have slightly different models on how they make money. For example, in Africa, their margin is fixed. So if the shipping rates are at $10,000 or $1,000, they make the same amount of money per trade. Where in areas like Europe and UK, so we saw in the Europe results that they actually didn't have a great year. The net profit after tax actually fell. And that was because the shipping rates decreased. And the reason for that is in areas like those, they are dependent on the shipping rates for their margin. So basically how they make money is there's the value of the product plus the shipping rates. From that total value, they take a commission on that. So in short, in those areas, if the shipping rates are high and trade volumes are high, they make more money and vice versa. But in Africa, it's more fixed. So that is also nice why it's geographically diversified. But in a nutshell, that is why they are volume-based, because the more transactions happen, the more commissions they can take. And then they have secondary ways of making money like financial services and renting out warehouses, but that's a smaller part of their business. The main part is shipping and making sure that goods get from one place to another place and taking bits and pieces of money from that. But they also have value-added services in their offering, and that I can't explain how they make money, because I'm sure with the different value-added services, it's not quantifiable, one formula on how they make money. It is per client, it is different. So just throughout their value chain, bits and pieces, that's where they make money. But in a rough explanation, that's how they make money.
I see. Tell us about the basic financials, the market cap, the PE. Where does this company stand at the moment?
Yeah, so I mean, the share price changes every day, so depending on when this video comes out. But at the time of this recording, I think it's R9.40 a share. It had a very, very nice run, which I'm smiling about since the results came out. But it's now around R9.40, a PE ratio of around 6, which is very, very low, especially because they are global operators. So more than 72% of the earnings are actually from outside countries. So, Europe or other continents or other countries. So they actually earn in dollars, and they are basically a global company. And if you look at global companies, especially, if you look at the US, companies that's similar to Santova trade at 15 to 25 PE multiples, and Santova is at a 6 PE multiple, price to earnings. So 6 PE multiple, they don't really pay any dividends at the moment. We'll go into that also, why they don't do that. And on a market cap of 1.2 billion rand. So it's still a small cap, even though they are global, they are still a small cap. And that's also one of the reasons why it could be seen as undervalued. It's small caps in South Africa don't trade at a premium because just of where it is listed, and there's lower liquidity. Liquidity drives markets, but it is still a small cap, and that's also where opportunities lies. It's also where risk lies, because smaller companies have more risks. But with Santova, I'm happy with those, but we can get into that now.
So Santova always says that they are an asset-light company. Do you mind explaining that to us?
Okay, so with logistics, you've got trucks, you've got planes, you've got ships, all of that. That is like asset heavy. Where Santova is just the operator. They just make sure that, the trucking companies, shipping companies, that, they connect them with their clients, and they are just the middleman. They are the operator. So they don't own the actual ship or the actual airplane. They just make sure that those parties are connected. So by asset light, they just mean they don't really have that big depreciation or risk of assets or having to invest in lots of assets to grow. They just operate.
I see. So they're much more a tech company than an actual logistics, physical logistics company.
Yes, that it could be seen as that, and that's also how they explain themselves, by a technology-driven supply chain solutions company.
Great. So Higgo, the results recently came out. Of course, you're a very happy man. I know the share price also reacted positively. Do you mind quickly going through those?
Yeah. So I'll just read some of the results. So the revenue was up 7.9%. So slight revenue growth, but it's very important to note. So after COVID or 2020, supply chain solutions or supply chain was in chaos. So that obviously presented a massive opportunity for Santova, and that's also where the shipping rates went ballistic. It was like 8x from where it was, around about that. It was a massive growth in shipping rates, and that's how they actually made a lot of their revenue growth. The previous year's revenue growth was 40%, and the earnings per share was up around 170%. So the previous year was a massive record-breaking year. So even for Santova to grow from that base, which was this absolute like not abnormal year, they grew from that. So I actually expected, I wouldn't have been surprised if we saw a little bit of a revenue decline, but we actually saw a slight revenue growth from a very high base. So that's an important point. The profit after tax grew by 23.8%. Their offshore earnings above 72%. Their operating margin, which we'll touch on later, is at 43%. That was up 6%, but 43% operating margin is crazy. They also highlighted that in the investor presentation that normally it's about 5 to 10% for their competitors or people in the industry. So that is crazy. And that's also a sign of their good technology operations. Headline earnings per share increased by 22%, and their net asset value increased by 34.4%. Although that is good growth in the net asset value, once again, our asset light. So I've never really looked at Santova's net asset value, but I mean, it's always good to see that. So overall, you need to go through the financial statements to get it in detail, and through the investor presentation to really look at the numbers in detail. But overall, I'm really happy with these results, and the market rewarded them for that. That's why we saw the massive share price increase in the last few weeks.
Tell us about the management team. I know it used to be a very small company in Durban, and now it's a multinational company with 80% of the profits coming from offshore.
Yeah.
How are these guys doing this?
Yeah, so I've got a lot of respect for the CEO, not only as how he operates and what he's been able to achieve with the company overall, but actually in high school, when I was starting a few hustles and investing, and actually tried a few tech companies back in the day, I tried to get a mentor and just reach out to people. And I emailed so many companies, and none of them actually replied, because I emailed their CEOs and tried to connect with them on LinkedIn. Should have probably started lower, but he actually responded, and I got to see him for like 5 or 10 minutes before he headed off to Singapore. But I'm sure he doesn't sleep a lot, because he's a busy man, and he's a really good operator. But not only him, the rest of Santova, if you just see what the management has been able to execute and do over the past few years, how they've expanded globally, how they've executed on what they're saying they are going to execute. I mean, it's a really good team. And if you look at the inside ownership with the shares, it's around 20%. That is massive inside ownership. That means the management has skin in the game. And I love that, because there's that quote that says, show me where the incentive is and I'll show you the outcome. And obviously when you have a lot of shares, well, that's an incentive for the company to grow the share.
Tell me about the 0% dividend. Of course, they're still very, very small, so I assume there's quite a bit of share buybacks happening.
Yeah, so I'm a big fan of share buybacks when it makes sense. So it makes sense when the valuation is good. So the thing is with Santova, so what a share buyback does in a very, very little nutshell is it increases the earnings per share. So that's why it helps them to get a lower PE, which actually means they are lower valued or undervalued if the PE is lower. So basically they believe in buying back shares because they believe their share is undervalued. That's usually what it says. And secondly, they don't pay dividends, as I've seen in quite a few investors, because they believe they can invest the cash that they have on hand elsewhere in better long-term places where they can get better return on investment. So that includes buybacks, because share buybacks is a long-term benefit, not just a short-term benefit like a dividend. Secondly, in the investor presentation, they highlighted 2 other areas that they will be spending cash, so buybacks is one of them, dividends is not one of them. Another one is that this is going to be a year of investing. They are expanding into US. So they recently acquired a company called A-Link. What they usually do, Santova, is when they do acquisitions, they buy a it's smaller acquisitions, the total sizes, into a new area, and then they grow organically from that. So it's a lower risking type investment, which I like. And they bought a company in US. They've been aiming to go into the US for quite some time. they already have a lot of clients that goes into the US. So that's almost, they already have a foot. Now that they have the location there, they almost have immediate volumes, which is great. Other than that, like expanding and investing into existing operations, growing existing businesses, investing into the employees. They also launched another business or a startup within Santova called Sakida, which is a business-to-business marketplace for e-commerce globally. Which is quite interesting. We're going to have to see how that plays out. It's almost an experiment. It won't cost them too much, but it's good to see that they're innovating. But other than that, they actually mentioned they could be possibly looking at acquisitions. The reason why we haven't seen a lot of acquisitions from Santova in the last 3 years is everything was extremely overvalued. If you look at PE ratios globally, it was just extremely high, especially in other countries. And they are a conservative management. Even if they give outlooks or prospects or goals, they are always conservative. And they've never really done an acquisition with a PE multiple of 30, 40, 50. They believe in acquiring at a 5 or 6 PE and growing the business from that organically. So I won't be surprised if we see some acquisitions in this financial year as well. But let's see if the opportunity comes. I'm backing the management to think wisely.
Higgo, let's move over to the financials, especially, so you've mentioned the income statement, the operational efficiency with the operating margin, which is, I can't really remember, but I think 40%, which is amazing. Let's chat about the balance sheet. So mention maybe cash. I know they're cash generative business, and debt, because in a small cap company, debt can be a problem, especially in a high interest rate environment like we're seeing now.
Yeah, so that's a nice thing. Obviously, Santova has some debt, but their assets and their current assets far exceed their actual liabilities or their debt. So I'm not worried that they'll not be able to pay their debt. I don't even look at that, because I looked at it once, and if you look at the debt versus the assets, I'm comfortable with that. The one thing in the balance sheet that really makes me comfortable is on how much cash they are sitting. So first of all, they are generating proper free cash flow. It's obviously with the lower shipping rates. So after COVID, supply chain issues, we saw the shipping rates go up massively. And that's where Santova made a lot of margins, especially in areas like Europe. Now the shipping rates have declined. I think it's even below COVID levels. But now they have much better working capital flow. So that also means that they are generating better cash flows. And if you look at their cash flow position, it's more than 400 million. They're sitting on cash and cash equivalents of more than 400 million. This is a company with a market cap of 1.2 billion rand. So almost a third of their value of their market cap is in cash. So they've got enough cash to do what they need to do. And they are still generating cash flow from their ordinary operations. So I'm really comfortable with their financial position. Once again, the cash is a third of the market cap. That is always great to see, and that's why I'm comfortable for them doing buybacks, looking at potential acquisitions, or investing in existing operations. So I'm comfortable with the balance sheet, and also the debtor days are decreasing, which is a big point. I think it's from 41 days to 38 days. And that just shows that they are looking better after the clients that owes them money, making sure they give good credit away. And Santova also really focuses on getting good clients. So they don't just take anybody, and say, we're open to everyone, come be our client. They're actually picky on who their clients are. And that's actually a good thing, in my opinion.
Yeah, slow and steady wins the race. I kind of like that. Okay, Higgo, so we know you're obviously very bullish. Higgo Santova van Biljon, as we call you in the office. Bearish factors, very important, especially for a small cap.
Yeah, so it is in a specific industry, and that is logistics. So I'll name some of the risks, and then also some points that cover those risks. So the first risk is obviously shipping rates. Will they continue to fall? They are low. But the thing is, Santova is they are geographically diversified. So if one area takes a lot of strain, they've got other areas that will cover that. But it wasn't a great year for the European area, and that is because the shipping rates fell. And one thing also is in these times where things are actually on a downward trend, it's a great time to invest, because once it turns again, those shipping rates will definitely go higher at some point in the future, and then they'll benefit in those areas again. But in the short term, shipping rates could influence certain areas of Santova's earnings, But once again, they are geographically diversified. Also, potential risk is that all companies are facing higher inflation, higher interest rates, recessions. Where there's recessions, there's lower e-commerce, there's lower overall goods buying and selling. So there's less trade. And that's probably why the shipping rates have fallen so far. So, we don't know how long that will last. Some say by the fourth quarter of this year, we'll start to see a recovery, but nobody knows. But I mean, those are the risks that all businesses face. And then one potential risk that people could say, but I'll address that very quickly, is customer concentration risk. So because Santova is business to business, what if 5 of their biggest clients leave? Their top 20 clients is around 17% of their revenues, 17%. So they don't have client-centric or client, client concentration risk. They are quite diversified in the clients, and they're getting lots of new clients. And I actually asked the management in one of my questions on the call, how is their retention/expansion rates looking? And their CEO commented that they basically never lose customers. Like once they get a customer, they keep the customers, and on average, their customers are spending more or generating more and more revenue for them year over year. So that is also a metric I love when I look at business to business companies. But other all risks, it is a small company. I mean, all companies have risk. That's the bottom line. It's business. There's that 1% scenario in all businesses that nobody really knows of, and then it happens. So it's that's why diversification is good for investing. Although I think if you look at my portfolio, you'd say I'm not really a diversified investor, and Santova is the biggest one. But I'm comfortable looking at the risk and seeing how they address them. And also, if you go through their financial statements, they really represent and show all of their risks. So you can go look at those risks if you are someone that want to know what you're getting into.
Maybe one more, something that bothered me, especially in the beginning with Santova, was I didn't really understand the technology because they are very secretive about it.
Yeah, so they are secretive. I mean, there could be a lot of reasons. First of all, it's IP. They don't want competitors to get any idea of how good they are, what they're doing, how they are solving it. So, that's they can't really just show the technology to the whole world. That's the one thing. But their results speak for themselves. So they say they are good at technology, and that's how they get the high efficiency rate and high optimization. But if you look at the operating margin, which is at 43%, that is crazy. Companies, if you're a good tech company, even a good operating margin is around 20 to 25%. And that's excellent. Logistic companies, like what they're doing, is like 5 to 10%. So 43% just shows that the technology is really, really working. And even if you look at their revenue per employee, which is a metric that they put in their investor presentations, their revenue per employee is constantly increasing. And that just shows technology. I mean, otherwise, if it's a consultation fee, hours, you cap to hours and you cap to how many people work for you. But if you have technology, then those results speak for themselves. So it's difficult to understand practically, especially as a consumer who doesn't use their technology, how good it is. But if you look at the results, that justifies it. But once again, it is a risk. It's also one of the risks of investing in Santova is that you can't really understand the technology itself inside out. But that is where you have to be either believe in the numbers or don't. Like, I'm bullish on Santova and I'm happy to take on these risks. So just because I invest in Santova doesn't mean you should. So don't take it as financial advice. I know this entire interview comes across that I'm bullish because I am over the long term. I think the share price has run a lot recently. I won't be surprised if we see the share price stagnant for a while or even, just cooling off a bit. And I'm fine with that. Maybe it doesn't. We've seen with Santova, it went from 1 Rand to 3 Rand to 5 Rand to 7 Rand to 8 Rand, now 9 Rand. But in those periods, there was a lot of stagnation, a lot of volatility. And this is a company I'm happy to hold for 5 years plus if they continue delivering like they are doing. So, if you buy Santova now and lose money over the next 12 months, that's on you. I'm not that, so I'm in Santova for the long run.
Yeah, I see there's a lot of Twitter, comments asking, do you think it will still continue to rally? Because we've seen a massive jump to the upside. and this is your answer. So it might cool off a little bit, but we're not here for a quick flip. We're here for a 3 to 5 year investment.
Look, it had a massive run, but as they have every year over year, like year over year, they have this spike where there's a massive run, especially after results or a big announcement or, after presentations, because that's when there is excitement. And when there's excitement, people start buying. And then you get the periods where excitement goes away, and then some people start selling because they want to say go up, and the share price doesn't go up, as many of us do when we are short-sighted. But nobody knows. It could continue running because it is still on a P of 6, which is cheap, and they are also growing. I think the next year is going to be a really challenging year for them, as with all companies. They also, in the presentation, they highlighted, look, there's a lot of challenges. It's going to be a challenging year. It's going to be a lot of hard work. They have to work smart. They have to execute well. So I'm not expecting this financial year to be a massive year where we see revenues even more than 10% or earnings more than 20%. I'm not too optimistic on that side. I'm optimistic about the long-term business of Santova. In 3 years' time, once global economies are looking good again, trade volumes are up, shipping rates are a bit higher. By that time, hopefully they've executed well in the US as well as expanded in other areas, onboarded more new clients. I think then you might be happy owning Santova shares, but we'll have to wait and see. And nobody knows. You need to be comfortable with the risks, and I am.
Higgo, thank you so much for your time and the highly anticipated Santova Stock Savvy episode. I hope you learned a lot. If you would like to see more or any other stocks, please comment below. We would love to cover them. And until next time, have a great week.
Yeah, awesome. Just as a final comment, if you have any more questions about Santova, please ask in the comments. I'll look at the comments, and if there's any insights or input I can deliver, I'll do that. So don't be afraid to ask questions. Thanks for watching, and I hope you got some value.